Welcome to Biz Wire. President Xi Jinping and Premier Li Keqiang have taken power as official data shows signs of improvement, with employment numbers looking stronger, though many challenges await the new leadership. Former President Hu Jintao's stated goal of doubling 2010 wages by 2020 remains a high priority. Last year, 3.5 million people left the workforce, a trend that will continue as China's population rapidly ages, but demand for workers is strong. The Wall Street Journal reported a survey of 4,200 Chinese employers by human resources consultancy Manpower Group, which found that the number of firms planning to hire more workers in the second quarter was up after falling sharply in the middle of last year. The journal also cited a survey of more than 24,000 employers by 51job.com, a leading Chinese recruitment website, showing similar positive results with demand for all workers, but especially those with experience on the rise. Tom Orlick of the Journal wrote that evidence of rising demand for workers over the first quarter probably means they are now tighter still, placing more upward pressure on wages. Coastal export centers Zhejiang and Guangdong provinces hiked the minimum wage by 12% and 19% already this year, with the hopes of arming consumers with more cash to spend. With the central government's inequality plan promising to lift minimum wages to 40% of the average, further steep increases can be expected across the country. Another survey of more than 300 factories in the Pearl River Delta by Stephen Green, China economist at Standard Chartered, found that wages for blue-collar workers are set to rise 9.2% in 2013, up from a 7.6% increase last year. Tom Orlick writes that rising wages reflects a significant shift in the structure of the labor market from excess supply to excess demand. The story, however, is not the same for white-collar workers. According to 51job.com's first quarter survey, many were getting relatively modest 2013 pay rises of 5 to 10%, which might reflect the glut of new graduates coming onto the market, depressing wages. Demand for workers is stronger from firms serving the domestic market and weaker for firms exporting abroad. Other analysts show that hiring intentions are stronger in services and weaker in manufacturing. According to 51job.com's survey, the strongest demand for workers was in e-commerce and weakest in the trade sector, further showing the shifts happening in the Chinese economy. 51job.com also found that real estate firms were taking on more workers, reflecting the surge in sales and construction over the last few months. Well, it wouldn't be China, though, if there wasn't conflicting data to sort through, as the China Federation of Logistics and Purchasing PMI Employment Index came in at 47.6 last month, below the 50 mark that separates hiring from firing. Taken together, though, and it seems that wages are rising sharply with strong demand for workers and a shrinking supply. Orlick says this is a mixed blessing for the Chinese economy, as high employment and rising wages should promote stronger domestic consumption. It's also an indicator of strength in China's factories and offices, which need to take on more workers to meet rising demand. But rapid increases in the cost of labor are also a reminder that the structural transition in China's labor markets from excess supply of workers to excess demand is real, and employers are feeling the pinch. For example, Foxconn, the producer of the iPhone and the largest private employer in China with over 1.3 million workers, reported net margins of 3.5% in the third quarter of last year. If higher wages are not matched by increases in productivity, inflationary pressure will grow, undermining gains and fueling discontent. The result could be that China's exporters will try to pass on higher labor costs to their customers, nudging up prices for consumer goods in the United States. Hannah Levenger of Deutsche Bank writes in a report that since China's WTO ascension in 2001, real wages paid in the manufacturing sector have risen by almost 200% in U.S. dollar terms, surpassing Thailand and closing the gap with the Philippines. Labor productivity, though, has slowed down over the last couple of years, and China's real GDP per worker is still below Thailand's and Malaysia's, not to mention South Korea's. A similar slowdown was observed in total factor productivity, which takes into account efficiency gains such as managerial competence and the use of technology. Levenger does point out several positive trends. For example, rising incomes create demand for services, which in turn generates new jobs. Also, while Southeast Asian countries have been able to profit from China's rising labor costs, Levenger said China remains a powerful competitor even in labor-intensive industries. For example, Vietnam's real wages and manufacturing have risen almost as fast as China's, but Vietnamese labor productivity was stuck at just 26% of China's. So, in order to fulfill the promise of the much-talked-about Chinese dream, the new leadership, together with its companies, have to find a balance between maintaining export competitiveness in manufacturing by increasing added value and promoting domestic consumption.